Welcome to Chit Chat Stocks. Before we get to this episode, we want to talk about our friends at Public. If you trade options, you've got to ask yourself, why wouldn't you choose an options trading platform that puts investors first? At public.com, there are no commissions or per contract fees, and more importantly, it's the only platform where you can earn a rebate on every single contract traded. That means you can save on your options trading costs and keep more of your capital in play. Whenever you trade options on Public, your savings are automatically applied. So don't change your strategy, change your platform, and see the difference in your bottom line. That's no commissions, no per contract fees, and it's the only options trading platform where you can earn a rebate on every contract traded. Public.com. This is paid for by Public Investing. Options are not suitable for all investors and carry significant risk. Full disclosures are in the podcast description.
Welcome to Chit Chat Stocks. On this show, hosts Ryan Henderson and Brett Schaefer analyze businesses and riff on the world of investing. As a quick reminder, Chit Chat Stocks is a CCM Media Group podcast. Anything discussed on Chit Chat Stocks by Ryan, Brett, or any other podcast guest is not formal advice or recommendation. Now please enjoy this episode.
Okay, welcome into Chit Chat Stocks. This is our Wednesday episode, and as we like to mix things up, we have an interview today with someone who's been on the show before, Ian Bezek, author of Ian's Insider Corner, covering a plethora of value stocks, as we just talked about before hitting record. It's finding opportunities where they are, but there is a big focus. I would say he is an expert on Latin American countries and investing in Latin America, Mexico, Colombia, various other spots. But today we're focusing on Mexico. And we're going to get a quick update on the country. I think the title might be, Is Mexico Investable? Something along those lines. So we're really going to hit that. There was the election. There's been big peso movements. There's been the reshoring theme. We're going to hit all that. But Ian, welcome to the show. Maybe first question, what even how I try to say this, what are the big misconceptions about investing in Mexico and countries south of the US border?
Yeah, thank you for having me back on the show. I really appreciate it. I know we talked about some Mexican stuff before, and I know a lot of people are having some skepticism right now. So I appreciate you guys making the invitation, giving me a chance to stick up for the Bulls here during this moment of shaking confidence. Misconceptions. I think people think the crime situation's getting worse, whereas in reality, the homicide rate's gone down each of the past 4 years. Obviously, Mexico has more crime than anyone would like. But I don't see how anything has happened in 2024 that would change the investment outlook on that front. People say the new president-elect is going to be a crazy leftist. In reality, she was very close to the outgoing president who led the Mexican economy very well over the past 6 years. The consensus among economists and among the Mexican media is that she's going to be more of the same. And so if Mexico was investable since 2018, when AMLO was in power, the baseline assumption would be that she's going to carry on the same level of governance, which has good points and bad points, but I don't understand the crisis reaction from abroad. So I'd say that's probably the two biggest things people have been worried about.
All right, and we're going to definitely hit that. That leads right into the first topic here, the Mexican election. I think it was in 2024, earlier this year. Either way, it was recent. What happened? What do investors need to know about this new administration coming in?
Yeah, sure. So Mexico has 6-year election cycles with no re-election. So AMLO, the outgoing president, was elected in 2018. He governed through 2024. He was exceptionally popular. His approval rating was usually around 70%. And so he said that my successor is going to be Claudia Sheinbaum. And she was above 50% in the polls the whole election cycle. There was never any serious opposition to her. And then on election night, she won handily. I think she got 58% of the vote. So it was just simply never a competitive election. AMLO was popular. People were happy with the progress he made. And then I believe the election was the first week of June. She won. And then we've kind of seen the market. The market initially skidded lower. Then there was a decent bounce, but now it's gone even lower. But she doesn't actually take office until the end of November, so there's a long transition period for people to kind of discuss what her policies may be.
And what are the now you said that stocks have fallen because of this. There's this narrative out there that she'll be bad for business and stuff like that, that she's a crazy leftist. I guess from what I read about it, if you kind of read, I don't know, just the details of her life and what she's done in Mexico City. I think the things I read is that Mexico City, when she was the mayor, crime came down a ton. And then she also has, unlike this other um, prior president who's still in office right now, she actually has spent time in the United States and speaks English. So there could be maybe a better relationship with the United States. But what are the negatives, and why do you disagree with them?
Yeah, that's correct. She studied at Stanford, I believe, in California for 4 years. She has a very good grasp of English. When Biden called to congratulate her, she got rid of the translator and said, "I can do this by myself." So that's a nice sign. AMLO, the outgoing president, did not speak good English. He refused to travel outside of Mexico, and so all foreign dignitaries had to come visit him. AMLO was a very 1980s style Latin American populist leader that really was not all that interested in diplomacy and international affairs. And I think he governed the country all right despite that, but that was a significant negative, that he was not interested in the global community. And kind of his diplomacy with Trump was like, I like Trump because he's a strong leader and I'm a strong leader, so therefore we do stuff. But I think Scheinbaum will take a much more pragmatic, kind of neoliberal approach to policymaking and seek to incorporate a lot more global opinion and influence into her approach. A big concern around her is that she's a climate scientist. She studied environmental engineering, I believe. And so people just hear that and assume that there's just going to be a disaster in terms of her economic policy. But like you said, she was the mayor of Mexico City. Her policies were reasonable. She focused on stuff like lowering traffic, like alleviating traffic congestion to reduce smog, which is, I think, something that people would say is a reasonable way to fight climate issues rather than some sort of crazy approach. Um, let's see. Yeah, and another big issue is with the oil company. Mexico loses a ton of money subsidizing Pemex, and the outgoing president still had that 1980s mentality where natural resources are king, and so he invested, I believe, $15 billion into a new refinery that people say is going to lose money from day one. Like, he just couldn't let go of the past, and I think she's much more likely to take a pragmatic approach to building like modern industries rather than being stuck with this more outdated view.
Yeah, and I think that all makes sense. It seems, again, I just am biased to liking Mexican stocks as well, but it seems to me like she could be honestly a huge improvement over AMLO from an investor perspective. And one thing that people discuss is, the violence that has happened in some of the regions in the country. But I think the homicide rate in Mexico City came down, and as you mentioned, the actual stats of the I don't know what sort of crime rates they are, but they haven't gotten worse, like those, newspaper headlines or clickbait headlines might say. What are your thoughts on that idea that you can't invest in Mexico because it's like a, quote unquote corrupt country, or, the cartels run stuff? I mean, you see investors talk about that type of thing. Is that have any sort of validity, or is that something you're not concerned about?
I'll give you a funny anecdote first, which is I talked with investor relations at one of the airport companies, and he said that the top concern they'd heard from American investors was crime, like since the company was listed, and they've produced a 500% total return since then, and crime is still the top thing everyone asks about. So he's like, it's ever
Yeah.
present in the background. We pay more on security, that sort of stuff than an airport company in Europe would, but it's just a background part of the business landscape. It's not something that's informing our day-to-day decisions. I think another important thing to realize is that you had very open warfare in Mexico like 10 years ago between cartels, like in major cities. You had cities like Ciudad Juarez that were the most dangerous in the world. And now it's much more in rural communities and areas where there's not really much economic activity. Obviously, any homicide is way too much, but if it's not happening where business is happening, that lowers the risk profile. I think you see that in terms of all the big companies like Tesla, obviously, but all these huge companies that are announcing new auto plants, aviation plants, even semiconductors now in Mexico that have announced that since the pandemic under AMLO. And so clearly they have looked at the security profile and said, hey, we're willing to put 3 billion, 5 billion into a factory here.
Yeah, I was going to ask about that. It feels like, I'd say, kind of going off gut here, but around 2022, I believe it seemed like there was a lot of positive sentiment about Mexico, especially around nearshoring. There was the demographic tailwind, which I assume is still there because it's hard for those to change very quickly. And then there was a lot of talk also about just general foreign investment into the country. How have those trends evolved at all? Has there been any big developments nearshoring wise? Any large? You just mentioned one company with I think you said $3.5 billion investment. Has it been something that's continued, and has there been more spend from these foreign companies?
Yeah, so last year, to give a very concrete marker of success, Mexico passed China as the largest exporter to the US. So nice to see, kind of a very concrete sign that the reshoring narrative is actually reality, not just a story. Um, in terms of investments, we have not quite hit a record in foreign direct investment yet, but we're getting close to the peak from a decade ago when Mexican stocks were trading far, far higher than they are now. So foreign direct investment trending very sharply in the correct direction. You're also seeing a lot more internal reinvestment from Mexican companies who before had been sitting on cash or investing elsewhere in Latin America. Now they're putting money back to work in their home markets and industries, which is fun to see. You saw record activity at the Mexican Stock Exchange for credit, like Mexican businesses are eagerly tapping funds. So I think you'll see a lot of construction, a lot of logistics. You're seeing a ton of IPOs activity in REITs, warehouses, logistics. Yeah, and so I think the activity is clearly there, both from multinationals and just Mexican companies that are saying, hey, this is actually a good business environment. It's like for the past decade, you had 1% GDP growth annually in Mexico. So companies were just kind of hunkered down for winter. But now you're seeing a real dynamism that you haven't seen since the early 2010s.
Yeah, and just to put like some numbers behind it here, I'm looking at the iShares MSCI Mexico ETF, and it's down 12.9% over the last year. Ian, you mentioned that that's one of the best ETFs to kind of follow to track the kind of sentiment on Mexican equities. Part of that, if we look recently, there's been a little bit of a significant drop related to, we're recording this on Tuesday, August 6th. Monday and Sunday, there was a big kind of currency-driven market downturn that ended up affecting Mexico and Mexican equities broadly. Can you maybe describe what happened there? And I assume most of our listeners are not currency experts, so maybe go into kind of the details on how it actually ultimately ends up impacting equities.
Okay, sure. Yeah, so I'll start with the technicals. Hopefully, can get this out of the way pretty quickly. But the basic idea is a carry trade, where you want to own assets that have a high interest rate, and then bet against assets that have a low interest rate, and then you can collect the difference as pure profit. People had been betting against the Japanese yen because Japan's interest rate has been 0% for more than a decade. And then anything so you bet against yen at 0, and then anything you buy with a yield is going to do better than that. So you could buy US bonds, for example, and get a 5% yield, which 5 is better than 0. So that's nice. But if you want to juice it up a bit, you can go to emerging markets that have even higher yields. Mexico still has some of the highest yields out there. The central bank rate is 11%. And to me, that seems way too high, given that Mexico has been performing well. The peso's been up, business is growing, inflation's like 4%. And so, in my view, the central bank rate has been way too high. This attracted a ton of capital. People are saying, oh, I can buy Mexican government bonds, no risk, 11%, short Japanese bonds, 0%. Maybe even use 2 or 3 times leverage on that. Now I'm making 22, 33% a year on what seems like a very low risk trade. Just between the pandemic and now, the Mexican peso had more than doubled against the Japanese yen. And then you throw the interest on there and it turns into just a crazy trade. I think the IRR was like 38% a year, like prior to the recent drawdown. And so you
Wow.
just had a lot of hedge funds and hot money that were long Mexican peso, short yen. Maybe they didn't know that much or care that much about the Mexican story. They just said, hey, this is a stable country, low inflation. They're paying me high yields. I like this trade. And obviously, Japan hiked interest rates recently. Things went kind of bonkers over there. The yen starts going the other direction, and all these hedge funds that were riding the momentum trade said, hey, I need to get out or I need to reduce my position sizing. And so suddenly, overnight, you basically have a 25% drop in the peso versus the yen, which is a huge move. And then Mexican stocks. Because like if you own the Mexican ETF in the US, it's quoted in dollars, not pesos. And so when the peso slumps, that hits your quotation in dollars. There's no one in Mexico saying I need to dump my stocks because Japan's central bank hiked interest rates, but just due to the vagaries of how foreign finance works, you get this huge move that's unrelated to the actual Mexican economy. And if anything, like the peso is getting a little bit strong, and so now that the peso is backed off, that makes their manufacturing more competitive. It makes their tourism more competitive. And so, in my opinion, this is a healthy correction in the Mexican peso that will boost GDP growth. Obviously, investors that are just looking at the volatility might think, oh, Mexico's unstable. I think this has something to do with the president-elect, whereas really it's totally unrelated to that.
Okay, that makes complete sense. I think that's a great overview on how this works and why, it's not actually the underlying Mexican economy that's getting hit. It was just something that happened in financial markets, which with big traders and hedge funds and all that good stuff. Now, I'm thinking as a listener, if I'm listening to this podcast and I hear you say, look, the Mexican economy and the thesis and the narrative has turned out to be, moving on the track that people thought, the people that are optimistic about the Mexican economy. And yet stocks are not really moving that much yet, although there has been. We'll talk about some that have performed quite well. You mentioned the airports. So it seemed like, okay, there could be some opportunities here. But if I'm someone from the United States, Europe, Japan, wherever, someone that's not really having boots on the ground, what do you look at to make sure, because, investing in a foreign country, you kind of want to make sure that, things are going well. What do you use to track to make sure that, the economy is doing well, the regulations are fine? I mean, obviously the elections are going to be in the news, but what are you looking at on a day-to-day basis to say, okay, Mexico's still doing like I think it's doing?
Yeah, I think for Mexico, I could answer that generally for any country or Mexico specifically. For Mexico specifically, because 80% of exports are now manufactured goods primarily to the US, I would just say that making sure that relations with the US remain good. And that's driving the whole story here. So as long as Scheinbaum is being reasonable in terms of relations with the US, as long as your trade continues to grow, which US-Mexico trade is going to have a record year in 2024, as long as you see new factories opening in Mexico run by US companies rather than factories shutting down. If factories started shutting down, I'd say, oh, we have problems here. Yeah, I think that's kind of the key metrics. The reshoring story is going to be the overarching theme. I forget the exact numbers, but excluding Mexico City, like 75% of the Mexican economy occurs in the border states next to the US. It's a crazy amount. It's just
Right.
I don't think people
I saw
understand
that
how much Mexico is tied to the US.
um yeah, I was sorry, I was gonna say that I've seen like various charts that the north versus the south, like the farther you move south in Mexico, people in the north are actually significantly wealthier than in the south, or businesses or incomes in general. And I guess that does make a lot of sense. Maybe let's talk more stocks now. We've discussed in the past the Mexican airports and ALSEA, which is a, let's say, very, very interesting fast food franchisor. I think I'm using the right term there. What companies are you interested in right now? Is ALSEA still something that you're interested in? I'm seeing the stock, at least in US dollars, has come down a little bit, but obviously that's probably because of the peso stuff. Do you still think there's opportunities with a lot of these companies that can benefit from a growing Mexican, consumer traveler whatsoever?
All right, new sponsor alert. This episode is brought to you by our friends at Yellow Brick Investing. Yellow Brick is an aggregator of the best stock pitches across the internet. By tracking thousands of blogs, newsletters, fun letters, podcasts, and more, they collect and summarize the best stock pitches and bring them to you in a single place. Think of it like a modern value investors club. I genuinely use Yellowbrick every single week here to try and discover new small cap ideas for the weekly Power Hour episodes that we do. And the best part is you get tons of features for free. Try it for yourself. Simply go to joinyellowbrick.com and search a company or ticker that you're interested in. You are bound to find a great report on just about any company. That is joinyellowbrick.com.
Yeah, so I'd say my four favorite ideas, kind of the ones that I've talked up the most recently with my followers, would be still the airports and ALSEA. So still like both of those. ALSEA has pulled back, 30% now off the highs, and so it got kind of expensive there for a few months, but I think it's back in a reasonable entry price here. Still like the airports. Two other ideas I like right now. One's called Rotoplas, which makes water tanks. I think it's the one company that will benefit specifically from Scheinbaum, since she's already announced that there's going to be huge investments in water infrastructure. Mexico is one of the most water-starved countries on Earth. Mexico City sits in the middle of a desert, essentially. The city's shrinking, like they've been tapping out all of their reservoirs. And so you're going to have huge investments in water recycling, which is something that Rotoplas does. And you have a huge amount of trucked in water, like from areas where there are rivers up to Mexico City, which is just horrible for the environment. Just imagine trucks going several hundred miles to carry water, drinking water up to people. This is ridiculous. And so obviously to make
not very
Mexico
efficient.
to make Mexico more prosperous and more environmentally sound and just kind of more of a modern country in general, I think you're going to see huge investments there. This is something AMLO didn't care about because he was, like I said, he was a very 80s pomp and circumstance president. His idea of investment was like building a railroad that no one's going to use and like just kind of building these huge, flashy, multi-billion-dollar projects. Whereas Scheinbaum is much more of like a practical, where can I make life 10% better for people? And she already announced since being elected that she's going to invest heavily in water. So I think Rotoplas is going to do well. There's also a construction angle there. Every house needs a water tank. They have overwhelming market share in Mexico for water tanks. And so if you believe there's a housing shortage in Mexico and that you need millions of new units, that's going to be a huge tailwind to their sales going forward. So that's one company. I don't know if you want to follow up on that, or should I go into the other one?
Yeah, I guess one follow-up on that is, what's the ticker for anyone that would want to do farther research?
Yeah, it's primarily traded in Mexico under the ticker AGUA, which is Spanish for water. So a catchy ticker. There's a OTC listing GRPRF, but it's not much trading there. So most trading happens on the Mexican exchange.
Okay, I mean, that thesis does make sense. What do the demographic tailwinds relate to the kind of the water infrastructure thesis as well, where you're going to have all this family formation that's been talked about, or is that, I guess, just generally for all these companies?
I think, yeah, you have more housing units because there will be more household formation. You have the largest part of the Mexican population is in their 20s and 30s. A lot of people still live with their parents. And so presumably, especially as the economy gets better, you would expect people to want to buy their own houses or apartments. Yeah.
All right. And the stock hasn't, I guess it's gone really nowhere. At least, I guess, I don't know. It depends what chart I'm looking at. It might be in US dollars here, but it's hasn't gone anywhere since, and I'm really looking at the basic stuff, since 2021. And stock trades at, I think, a PE just below 20. Is that sound right? And what is I guess, your thoughts on the growth prospects? Is this a low single digit grower, high single digit grower, even more? How are you valuing the stock?
Yeah, so I'll go even farther back. The stock IPO'd, I believe, 2016, 17. I don't remember offhand. But anyway, prior management was trying to grow at any cost, empire building, making acquisitions in South America, just the usual bad decision making. And so the stock went down. And then finally that you bring in new management. New management says we've been doing a lot of stupid stuff. And so now our focus is going to be on margins. Specifically, any new investments they make have to have an ROIC of double their cost of capital. Like any decision made at the company has to fit with that metric. They've had a 5-year plan to boost EBITDA, to double EBITDA margins. And they're well on their way to hitting that. So the 2025 goal, they're ahead of schedule. I think the market's a little frustrated because their revenues have been flattish recently. They've been turning down business, particularly in markets like Peru and Argentina that are more volatile and harder to make sure they hit their margin profiles on. So I think people look at the lack of top line growth and say, hey, this thing isn't moving. There's all these like favorable things going on, particularly in Mexico. And yet, I think when you look at the underlying story, it's like every quarter margins are up a couple hundred basis points. And so you see a company that is exercising pricing power and getting customers they want to deal with rather than taking any business just for revenue growth. They were also hit by the peso being too strong, which I know ironic, but because they import like goods for making the tanks and pipes and stuff from other places, and so as the peso went up, like your costs in Mexico for salaries and everything were going up, but you weren't necessarily getting more sales. And so now that the peso's backed off a little bit, there should be a big FX benefit in the back half of the year. I don't really care about that personally. Like I'm not playing it quarter to quarter, but for the funds that do want to see like a positive trend in earnings, like you're going to get a nice pop in earnings now that the peso is stabilized.
Yeah, I mean, makes sense to me. If it's, not a super demanding valuation, you have revenue not growing right now, but there is that long-term tailwind. And hey, if we get slight margin expansion, that's a great way to grow earnings per share.
And potentially a
I guess we
short-term
don't need to do a
tailwind if the president starts buying a lot of equipment, particularly the water treatment recycling. That's big ticket stuff, and then you get service revenues attached to running it as well. So if Rotoplas can get in on those contracts, it's going to be very good for them.
short-term catalyst, long-term tailwind. That's stuff we like as well. I guess one more follow-up on this company. What do you think of their new capital allocation? Or maybe you've talked about the ROIC stuff, but what about their capital returns? Do they have a dividend policy, buyback policy? I know a lot of people get frustrated with foreign, countries kind of hoarding cash in the balance, or it's not foreign countries, companies outside of the United States having inefficient balance sheets. So what are your thoughts on them?
Yeah, so they've paid, I believe, traditionally around a 2% dividend yield. They do want to return some capital to shareholders, but their rationale is to invest internally in the business on anything where they think they can achieve their stated targets and get them towards their EBITDA and growth goals. And so far, they've had enough internally that they felt that they can keep investing back in the business. But they would return capital if they run out of projects that were meeting their capital goals.
Okay, I want to talk about the airports because this is this is once again kind of gut feel, but it seems like some of the Mexican companies that most international investors follow, or at least American investors follow, because it's a business model that's fairly easy to understand. So I'm curious. Last we spoke was prior to sort of this. There was news about potential government intervention. I believe it was like some sort of a tax on revenue or sales. I think there were a lot of misconceptions with that. So could you maybe go over that news? And then also, could you explain like what these businesses are for anyone who's not familiar with the Mexican airports, how they came to be, and like how they actually make money?
Sure, and let me just throw one aside in there, and then I'll answer those questions. But it's funny that the Mexican airports are some of the most followed companies in the country because their market caps are sub $10 billion. We're talking about one of like the 10 largest economies in the world, and these companies are tiny, like in the grand scheme of things. The largest company in Mexico by market cap is Walmart Mexico, the subsidiary, obviously, of the U.S. retailer, with a $70 billion market cap. It is not even listed in the U.S. Like most investors don't even know it exists. And so your largest company in Mexico is only listed in Mexico and trading at like 18 times earnings. It's like that's where we are in the stage of the Mexican bull market, and the narrative like, oh, isn't Mexico like already popular? Like, no, not at all. But anyway, to your questions. Yeah, so the airport business model, the Mexico privatized most of the airports in the late 1990s. You have three holding companies that are publicly traded in New York that operate different concessions within Mexico. All of them have been good investments. They're attractive because you get guaranteed rate increases every year tied to inflation, and then your non-aeronautical revenues are not regulated or not regulated directly. And so all of your retail, car parking, advertising, all that sort of stuff, hotels, that has grown much faster than the regulated stuff. Like for Pacifico, I believe it's been 2.5 times as fast. There's a lot of benefits to scale. Like as your airport gets bigger, you get better advertisers, you get better luxury stores and everything. So it's just a very nice business model. All three of these airport operators have thrown out 70% EBITDA margins for the past 20 years. And when you get top line double-digit growth combined with that sort of margin, good things tend to happen. What went wrong last year? It started with the pandemic. The government gave them extra relief, kind of as a concession for them not making money in 2020. And so as a result, their EBITDA margins went from 70 up to like 75, 77, which was very nice. We appreciate the pandemic relief, but really we didn't need it. None of the airport groups had debt going into they were all at less than 1 times debt to EBITDA going into the pandemic. And traffic by the end of 2021 was back to 2019 levels anyway. So the airports start printing record money, and they're still getting this pandemic relief. And so the government is looking at it and saying, "Hey, why are you guys earning so much money? Like the concessions are supposed to give you like 70% margins. You're earning like 77, and you're generating record profits and paying out record dividends." And so one day we just got the announcement that the government was renegotiating the contracts. And so obviously people saw that and said, oh no, Mexico has a left wing government, socialism, they're going to nationalize everything. The stocks were down 40.
The meltdown on Twitter was very emotional, I would say.
Yes,
There were so many people saying, see, this is why you don't invest in Mexico, right? They were
that's right.
just, it was very, very harsh, but sorry, continue.
No, that's right. I was at the center of that storm and it was a rough couple of days. Um, but yeah, so the stocks are down 40 to 50% overnight. Because we just didn't know what was going on. We just got this terse like press release that the contracts were being renegotiated. Fortunately, cooler heads prevailed. Once they started negotiating, we saw the government just wanted to walk back the pandemic-related like extra benefits that they got, and now EBITDA margins are going back to 70%, which I mean we're not going to grow profits this year, whereas we would have otherwise, but it's fine. I think these are 50-year contracts. You don't want to make stakeholders upset. And so I think it's perfectly reasonable that we go back to where the contracts were prior to COVID. You already had a key piece of how the airports work in Mexico. You renegotiate every 5 years in terms of how quickly you can raise rates, like tied to inflation. But then you as the airport operator have to build like new terminals or runways or whatever to get your rate increase. And so we already had one of those renegotiations that went through last fall, and they got a renegotiation that was status quo, like precisely what you would have expected. And so that threw another bucket of cold water on this idea that the government had it out for the airports. Like it's like business as usual, just we don't want you guys earning excess profits anymore. And here you can have your normal rate increase.
How has tourism changed following COVID? I know last we spoke, I think it was mostly about Pacifico airports. There was a big kind of boom following COVID from tourism from the States into some of the just the higher traffic into some of the more touristy destinations. Are we seeing more in-country travel, or is it still kind of tourism from the States is being sort of a growth vector for them?
That is a great question, and to be honest, I can't answer it. And there's a good reason for why I can't answer it, which is the aircraft shortage that we're having now. I don't know how closely you follow this, but all of the Boeing 737 issues have grounded a lot of U.S. planes that would normally fly into Mexico. And then two of the three Mexican carriers are heavily reliant on the Pratt and Whitney engines that have also been recalled. So I believe Volaris is the largest discount carrier in Mexico. I believe they're down 20% of their planes, and similarly for Aeromexico. Um, and then like in the US, you see like Spirit appears to be on the verge of bankruptcy. So all this to say that there's huge capacity problems. There's just not enough planes. And so like load factors, like the amount of people on planes at the Mexican airports has never been higher, but just the amount of planes hitting our airports is down like 5% year over year just because no one has enough metal. And so as a result, the airlines are moving capacity from domestic routes to international routes because they get paid more. You can charge a lot more for international flights. And so you're seeing growth in international and shrinkage in domestic, but I don't think that's organic. I think it's just airlines are making the best of a bad hand. My guess is when the market normalizes, which is probably the end of 2025, you'll see domestic grow a lot faster than international, but that's just a hunch. Like right now, the airlines are playing a really difficult hand.
Yeah, it seems like, I was trying to think while you were talking there, what would cause I guess the two factors, the domestic tourism or domestic travel, which is really just going to be, well, if a country's economy grows, there's going to be more money spent on this. And then I'm really struggling to think of why tourism from the United States and maybe, a smaller amount from other countries would slow down. It's hard to imagine. I just don't think that, again, as long as the government stuff is there, no stock is foolproof, but it feels like, businesses that are going to be pretty inevitable if this tourism keeps going. Is that how you think about it?
Yeah, I mean, I agree with you. That's what I do think about the downside risks, just to be careful because they're huge positions for me. And so I'd say what could go wrong, like if you had an actual crime wave, we haven't really had one, but if you had one, particularly if the State Department issued a blanket, like, uh, be very cautious traveling to Mexico sort of advisory, as they have for Colombia, for example. If they did that for Mexico, I think that would hit demand pretty badly. Um, you actually had the Mexico's aviation sector got downgraded from category 1 to category 2, which limited the amount of new routes that they could open to US. But that's been resolved now. But if you had other issues with Mexican aviation regulation, that could be an issue. Remote work, there's a lot of Americans and Canadians living in Mexico permanently or semi-permanently, and they're flying a ton. Like I don't know, someone living in Mexico City might fly back and forth 6 times a year, so they're driving way more travel than like an actual tourist. So like, I don't think this will happen, but if everyone says go back to the offices, like we're going to fire anyone that's trying to work for Mexico, I think you could lose a couple 100,000 like very frequent, very frequent travelers from Mexico who are just living there. Finally, the other risk I'd mentioned, this is alleviated over the past week or two, but if the Mexican peso gets too strong, then people say this isn't so attractive to live here. And so a lot of your remote workers and also retirees might say, hey, why don't we check out Costa Rica or Peru or whatever instead of Mexico?
And I don't know if it's all three of them, but I believe Pacifico had some international airports as well, correct?
That's correct. 2 in Jamaica.
Okay. I think we spoke about this last time, but I can't remember. Are they actively acquiring or building extensions to their existing ones?
They are building extensions in Guadalajara and in Tijuana, and they're bidding. They're always looking for any airports to come on the market in the Americas. They're conservative, they're low bidders. Like there have been several concessions that went to other publicly traded companies that they didn't even bid on because they said, we can't make an offer that would hit our internal capital requirements. We'd rather just pay you dividends. That's what they're bidding for the Turks and Caicos concession that's open now. So that would be add to their position in the Caribbean if it goes through. I don't know. We'll see.
And is that typically a government seller? They just want the cash today and they're willing to sell it to some sort of private buyer?
Yeah, either a government seller or sometimes these contracts are resold. In the case of Sureste, another of the Mexican operators, they bought their Colombian airports because they were previously owned by Koreans who didn't really understand the market. And the Koreans just saw that they were struggling, like they didn't understand the retailing at the airports, for example, just culture clash. And so they auctioned it back off. And so the contract still stays under the terms of the original concession, but a new owner can get it.
Finchat.io is the complete stock research platform for fundamental investors. They have all the standard financial data on more than 100,000 stocks globally. But beyond that, they have company-specific segment and KPI data on 1,800 stocks. Want to see NVIDIA's data center revenue? Finchat's got it. Like to track Spotify's premium subscribers? They've got that too. And they just added ETFs to the platform as well. The breadth of Finchat's data is truly one of a kind. We use Finchat every day, and I've personally been using the AI Copilot more and more to summarize earnings calls and conference transcripts. To get 15% off any paid plan, go to finchat.io/chitchat. That is finchat.io/chitchat to get 15% off any paid plan today. The link is in the show notes. Earlier in the show, you heard us talk about the investing platform public.com. That's where you can trade options with no commissions or per contract fees, and you get a rebate of up to 18 cents per contract traded. NerdWallet recently gave Public 5 out of 5 stars for options trading. If you want to see why, go to public.com and start getting a rebate of up to 18 cents per contract traded. Paid for by Public Investing's options not suitable for all investors and carry significant risk. Full disclosures in podcast description, U.S. members only. All right, let's talk about perhaps my favorite Mexican stock. I say this as someone who's never owned it, but maybe the time is now with the stock down 30%. ALSEA. We did a full podcast on them. For anyone who wants a full overview of the business and the history and stuff, go listen to that one from a while back. I'm sure the basics hasn't changed, but maybe give a brief synopsis on that and why the stock is down 30%. Has the story changed? Just an update on ALSEA.
Sure, yeah. Happy to follow up on that one. I think we recorded on it originally good timing. Yeah, I think the stock worked. I think it doubled from where we first talked about it. Like you said, big pullback. And so yeah, something changed, and is this a great buying opportunity? For people that aren't familiar, they're the largest fast food operator in South America, at least under one corporate roof, about 4,500 locations. A third of that is Starbucks, a third of that is Domino's, and then a third of that is everything else. Half their stores are in Mexico, and then the remainder are split between Europe, primarily Spain, and South America. The company originally got started with Domino's many years ago and Burger King, which they also have a smaller position in. And then 2001, they got the Starbucks concession for most of Latin America. That was the game changer. I think their stock was at 2 Mexican pesos at the time they inked the Starbucks deal, and now it's at like 55. So not sure what the CAGR on that is, but pretty good. And the company has been exceptionally aggressive over the years. They're always running it at like 4 or 5 times debt to EBITDA. This was their greatest strength, but also the great weakness, because it's like they're spending every last dollar they can to open more Starbucks and more Domino's. And when it works, it works. You're getting like 15, 18% returns, unlevered on new stores that you're opening, and then like throw a huge leverage on that. You have an absolute cash growth machine. Late 2010s, however, Latin American economies slowed down. Like I said, Mexico had 1% GDP growth for many years. Consumers were going back to cheaper options. Fast food's expensive, a luxury in Mexico and South America. And so it is actually vulnerable to economic tides. Then the pandemic hits. Like I said, the company's like 4 or 5 times levered. Now, most of their stores aren't open. Like the stock collapses. People think they're going away. But thankfully, they run Domino's, and they were the only like pizza company that had an app already in place for delivery. So like their app deliveries went up like I believe 50% in 2020 over the prior year, and so that got them through the storm. They've come back strong. Balance sheet is in good shape. They've rolled their debt. They're back to expansion mode. They're opening 300 new units a year. So management's back to their usual strategy, which just look at the stock chart prior to the pandemic worked exceptionally well for them. I think they'll continue to have success. I think Starbucks in particular, they can open like 200 stores a year between South America and Europe for the next decade. And obviously the market was loving this up until about April, I think the stock peaked. I think what's gone wrong there, just the sentiment around Mexico has cooled off a little bit for the reasons we've already discussed. But then obviously Starbucks, like US, the corporate parent, as their stock's gone way down. People are very frustrated with Starbucks' management. You have activists there. People are saying the model might be broken. Oh, is that a risk to the franchisee? Obviously, if things go so bad that like Starbucks' brand is damaged worldwide, I guess it could hurt them. But I don't think your Mexican or Colombian consumer that's buying Starbucks is looking at like their labor strife in the U.S. or there's too many homeless people in the bathrooms at the stores in New York or whatever the people are upset about in the U.S. So I'd say the Starbucks brand, at least globally, remains strong, and people should look past the concerns around the corporate parent.
Yeah, I should say anecdotally too, in South America, Starbucks is looked at as, I know it's somewhat of a premium brand in the United States, but it's definitely more of a premium brand. And when, I think maybe you mentioned this or someone else mentioned this to me, when they open up in, say, Colombia or Argentina or somewhere like that, there are lines out the door. And when they're a new location in a place that hasn't been before, people want to check it out. So I think that's maybe some evidence that the brand is still very, very strong in Latin America, and it might not have the same risk, but different risks because it's more of a premium product in those markets. But I guess one follow up on that: what's the runway for reinvestment for this company? I know the stock's probably looks cheap right now just because of the drawdown, but runway for reinvestment matters. Like, how penetrated are these markets?
Yeah, it's a great question. I think Mexico is getting fairly penetrated, but South America in particular, hardly anything. As recent going into the pandemic, I think there were only 20 Starbucks in all of Colombia, for example. I think it's up to about 100 now, but the largest Colombian chain is still many multiples of that. It's a country of 50 million people. I think it can support more than 100 Starbucks. Same for like Domino's, where I live in a city of 300,000 people, and the first Domino's just opened here like 2 years ago. So, to give an example, uh, yeah, I think there's still opportunity. Like you still see them announcing like we just opened the first Starbucks in the whole country of Uruguay, for example. Like there's still whole countries that there's no Starbucks. Um, and I'd also mention their Starbucks corporate is very happy with them when their operator in France ran into trouble. Starbucks gave ALSEA the opportunity to, which they did, to take over the France locations. And I think you'll see opportunities for them to get more stores, kind of as a cleanup for any, now that Starbucks is looking to reshape their operations, and ALSEA has been arguably their best franchisee partner. I think there's a lot of opportunity, both within their existing regions and anywhere else where there's more growth opportunities.
Would you say Starbucks, or have they broken it out by franchise type? Is it Starbucks the largest kind of growth driver for them, or is it a blend of all of them?
Yeah, it's Starbucks and Domino's depending on the year. During the pandemic, Domino's was the biggest growth driver. Now it's gone back to Starbucks. Oddly enough, Burger King is going to be a major player. For some reason, Argentines love Burger King, but the company was not wanting to open new stores during the socialist hyperinflation era. But now that Milei is in power, it sounds like ALSEA is going to open a ton of Burger Kings in Argentina. So that should be interesting. Yeah, in general,
It's
I'd
funny
just
that
say mix of Starbucks and Domino's.
Okay.
Gotcha. Yeah, and the general growth or potential in South America for some of these fast food, quick service restaurant chains. We've talked a lot of stocks, talked a lot about the economy. Hopefully, people get a better understanding of the general Mexican economy, how this election may be a little bit different than some of the headlines make it seem, how the cartel isn't running the entire country. And there's definitely some fun stocks for people to research further. I mean, I think I'm going to be researching this water tank one, ticker AGUA, and then there's the airports, all this stuff. But I think in general, and Ryan can have any follow-up questions for the end here too. What are you looking for in, there's hundreds of stocks out there across all these different Latin American countries. What are some of the criteria you look for in a stock that says, hey, this is going to make my watch list or something I'd buy?
Yeah, for Mexico specifically, I think the real opportunity here, like you mentioned, Mexico has great demographics, and you have people that were working on avocado farms making pennies a day that are now moving to Tesla factories and earning $5 an hour. These people are going to spend money in a way that they've never had access to before. So I think anything that enables that middle class emergence on a PPP adjusted basis, like spending purchase power basis, the state that Monterrey is in is now wealthier than Alabama and Louisiana. Like that's the level that Mexico is hitting, like in the north. And so I think as you see just tons of more factories open. You see relations with the US continue to grow as everything moves out of China. I think you're going to see tens of millions of Mexicans emerge to relative parity with American consumers, or at least like the low end of American consumers. And so I'm looking for companies that can ride that wave. Anything anything consumer related, be it retail, be it fast food, like we mentioned, travel with the airports, stuff that goes into construction, like water, like if people are going to be buying much nicer houses, it's going to be a huge driver there. And so, I mean, a lot of people think emerging markets are just banks and mining and utilities, but I think you can do a lot better than that. Mexico has several hundred listed companies, and so there's plenty of opportunities to go looking for stuff that can be more specialized in terms of riding the mega trend.
And for the listeners, why Ian's talking about the, say, growth from someone who is earning, what would the number be in US dollars? Maybe less than a good barrier is $10,000 a year, or even well less than that, and then growing to $15,000 a year, $20,000 a year, $25,000 a year, is you actually have room to, one, save, and two, have discretionary spending, which is before people were, it was a lot of the people were only on stuff that was durable goods like food. They have a bank account, obviously, but now they can do discretionary purchases like a more expensive quick service restaurant or taking a quick trip to another side of the country, which would involve going to the airport. So that's a huge change in just consumer habits as you hit that threshold of someone who can actually decide what they want to do with their money. And it seems like, especially, I didn't even know that fact about the Monterey state being passing some of the US states. That's quite interesting. It seems like a lot of the people in Mexico are making that transition.
Yeah, I think people just fail to appreciate how much Mexico's really developed. And I would encourage investors, particularly North American investors, to go just take a quick visit. You have very short flights from the US and Canada, and I think people see the reality has really changed from where maybe it was 10 or 20 years ago, or what you've seen in movies. I think you'll see that there's much more stable country than what's portrayed in the media. And I think particularly you have tens of millions of Mexican Americans living in the US, and then you have all these Mexicans that are working for US companies. You have these huge cultural ties that are forming. Like now, the most popular sporting event aside from the World Cup in Mexico is the Super Bowl. People like you have tens of millions of Mexicans that love the Dallas Cowboys. Like the cultural ties are so significant, and it's only going to grow as demographics keep playing out. And so I think if you're an American in particular, you should have a view on Mexico because it's going to be as close to the U.S. as Canada is within a few years in terms of importance.
Yeah, Sicario might be a good movie, but that's not really the reality on the ground anymore, is it?
Yeah.
I think that's a good way to sum it up. Sorry, Ryan, did you have a follow up there?
No, I was just going to say, Ian, it's always a pleasure when you come on the show, and it always gives me new stocks to look at. For listeners that enjoyed this, what's the best place that they can follow more of your work?
Yep. So Ian's Insider Corner is where I do my big write-ups on all the ideas we've talked about today and everything else that I look at. That's either on Substack or on Seeking Alpha, and then I'm active on Twitter, IR Bezek, Bezek, and you can reach me there for more just quick observation what's going on with the markets.
All right, and both those links will be in the show notes. I will say we just hit the surface level on a lot of these stocks. I know there's a lot of information for anyone new to the Mexican stock market and economy that they learned about, but Ian goes way more in depth, so definitely check out those links if you're interested in anything further. I'll say thank you, Ian, again for coming on. Let me hit the disclosure. We are not financial advisors. Anything we say on this show is not formal advice or recommendation. Ryan, I, or any podcast guest may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, for listening. Thank you, Ian, for joining us, and we'll see you next time.